Not only have we gone from Ditka's restaurant to Ditka's homeless shelter in the past 3 years,
Coach.
we just lost Jason Benetti to the Detroit Tigers. We're losing to Detroit.
How's it going?
I'm just going to miss Jason Benetti. He is a great broadcaster.
Oh, he is. He's cerebral palsy.
I'm aware.
I know.
Home at Flossmoor grad.
Yep. Sox fan through and through, but that wasn't enough to keep him. Now he's going to the Tigers.
I don't know.
Hopefully they got him a better offer.
I should have got into sports broadcasting.
Well, that's what I was thinking. When I heard the news, I thought, you know what? Dan, here's your calling. This is your side gig.
Yeah.
No?
I don't think Jerry Reinsdorf would hire me. Speaking of organizations that are struggling, like the White Sox, like the corporation known as the City of Chicago. Let's stay in the private sector, though. Ford Motor Company. Ford lost $62,000 on each electric vehicle it sold in this year's third quarter.
What?
How are you going to make up those losses? Volume. Yeah.
2K, how does that happen?
So it's just great. Biden up there in Belvedere yesterday touting the wonders of the transformation he's engineering in the auto industry as well as our larger economy. $62,000 on each electric vehicle, incentivizing businesses to make investments so they can lose $62,000 per unit.
He's fighting for the middle class. That's what he said all day yesterday.
Mm-hmm. But that is a banner success compared to other EV startups, the Wall Street Journal reports. A company called Lucid went public during the pandemic through a merger with a blank check company. In November 2021, it reached a market value of $91 billion, despite having delivered only 125 cars in its history. In these valuations. Well, since then, Lucid stock has lost 93% of its value. In the third quarter, it reported a $631 million net loss, which is a loss of $227,000 per car sold.
Keeps getting better. This is great.
When you got the government backstopping you, I mean, this is, Yugo Redux. I know these cars are more well put together than that offering or some of the offerings in the Soviet Union during that era. But, the dynamics work wherever their practices or don't work, this sort of industrial policy, the moral hazard that's created. And then per those contracts with UAW, I don't know how much longer you can go losing $62,000 per EV you're selling at Ford with the multi-billion-dollar investments you're making and not be on the wrong side of solvency. And by the way, in that circumstance, all the guarantees in those collective bargaining agreements are back on the table. Just FYI, ladies and gentlemen. For more on this and other matters, Jim Urio, host of the Future's Edge podcast, proprietor of Brandt's Restaurant in Palatine. Jim, thanks for joining us. Appreciate it.
Thanks for having me.
The exciting, burgeoning electric vehicle industry.
You buried the lead, though. There's the most amazing part of this whole story is that it was about 4 or 5 short months ago that the federal government lent, and I'm doing air quotes when I do lent, $9 billion to Ford to bump out its EV production and invest in EVs. I mean, this is the part about corporatism and socialism that dooms it to failure every time, is that the government is the king of malinvestment. The market will let you know what are good ideas and what are good technologies, and capital be allocated towards those things. When the government steps in, everything just gets messed up. And this isn't just in the car industry. That's why we've gone from 15,000 banks to 4,000 banks, with the top 10 banks having a greater percentage disproportionately to in history, is because it's an all corporatism movement where the federal government is picking the winners, and it's really ridiculous. And the market doesn't even really want EVs, it turns out.
It's speaking of the market, this was an interesting stat from our friend Jim Perry over at Perry International Capital Partners. The Magnificent Seven: Facebook, Apple, Amazon, Google, Microsoft, NVIDIA, Tesla. Those 7 stocks are up 12.2% this year. The other 493 and the Dow are up just over 0.5%. 24x difference between those 7 tech stocks and the entire rest of the companies listed on the Dow.
Yeah.
I mean the
That's
S&P.
horrible.
S&P. I'm sorry.
Yeah, it's a horrible statistic, and you have to look at like how and why it's happened. When you go back to the pandemic strategy, and those were the companies that were going to be the winners, and they already had the great balance sheet, and they already had the government blessing and contracts. And now all of a sudden, there's still, remember that we injected $7 to $8 trillion into the system to mitigate the economic losses from the shutdowns, and that money has to end up places, and oftentimes it ends up in places that don't make sense. Now, when I see the Magnificent Seven and see and all of them are fabulous companies. That part I'm not saying they're not. But you look at their PEs and you look at, should we still be buying and have all the money in there? And I think like the market is just saying, well, we have all this money. The rest of the market doesn't look very good just because the economic condition is beginning to deteriorate. So why don't we just park it here? It's almost like a bank account for people's money to buy Apple stock, which I don't think is a good idea. I think at any point in time that could be self-correcting, and self-correcting is an easy way to say something that's very, very painful. But I think it is a function of too much money being in the system. Those companies, we all it goes back to the corporatism discussion a little bit too. Those are companies that are in good graces with the federal government and all their different initiatives, including collecting data.
Yeah, and you see, I mean, it's this you break it out too. I mean, just looking at stocks across the indexes, mid caps, small caps, micro caps are all unchanged to down. It's the big boys. It's the big boys on the Nasdaq and in the S&P that are driving market returns because of what you're saying. We have we can play the rent-seeking game. The smaller operators don't have the personnel and the leverage to play that same game.
And guess who argues the most for regulation within an industry? The biggest players within that industry. ExxonMobil and COP loves when the government starts over-regulating oil and gas industry because the small players cannot compete with them. And that same goes for the Magnificent Seven. Anyway, I'm sure Apple and Amazon and Google are in there writing the regulations and the different rules that are going to govern the space that they operate in, because they know they're the ones with the scale and the leverage to get over it and, increasing their moat, as they say in the stock world, meaning, the competition, demoralizing and diminishing them.
So we live in a life of high inflation. Is the only way out of this to get Biden out of office?
Well, okay. So, yes, we got to get profligate spenders out of office. And the Republicans have not had the greatest record on spending as well, too. It seems like the only time they object to spending is when Democrats are in office, which, by the way, is at least one time to object to spending. Now, the fact that this is a huge deal that people might not get, but the last two bond auctions, 30-year bond auctions, and that's how the government raises money. So the government comes in, they sell bonds to the market. Both auctions, the market has told them, we are not paying the price you think we're going to pay for your bonds, meaning the market is telling the federal government that they're spending way, way too much money. And that's one of the reasons that long end yields are staying as high as they are. So until we can fix that, and there's been no even mention of austerity. All they ever mention about is raising taxes, which, by the way, will probably at this point in time reduce tax receipts, not increase them. So, yeah, to answer your question, the only way out of this is to reduce spending, and I put about a 2% probability that that's going to happen in the next couple of years.
Well, you also need system change with respect to the obligations that we're accruing because of the benefits that we've conferred. And, Wednesday night's debate, I wanted to get your take on this GOP presidential debate. There was this moment where Social Security was brought up. And by the way, I'm folding in Trump on this, too, because he's just as unwilling to address it in a structural way. Nobody on that stage raised the issue of protecting Social Security, raising the retirement age. It's always raising the retirement age. It's always sort of the central planner's argument. How should we tweak this system but maintain the fundamental problem with it that it's centrally planned? And nobody brought up what everybody knows or should know, which is these returns on all the money that you pay into Social Security. The Social Security benefits return, the return on investment is less than Treasury bonds. So why not at least offer a private option to those younger workers who want to opt in, or frankly, older workers that are still working that want to opt in? I don't care. Everybody should have access to a private option to manage their money, and and you have to do this gradually. So if you want to keep it in the hands of those money managers, those great money managers in the federal government, then you can do that too. But now the Republican Party is so stung by the ham-handed effort that George W. Bush made, almost 2 decades ago now, they won't even bring up a market-oriented solution to this. Frustrating.
Yeah, no, but it's because old people vote. And anytime the Republicans start talking about meaningful ways to adjust the system, and you might remember about 20 years ago when the big talk was you put Social Security money and the government was going to invest that money into the stock market, and I thought how great that is when the positions in different companies become huge. Sort of government knucklehead is sitting on the board of directors, so that was not a good thing too. But
No.
what you map out is a great system where you can just opt out and privatize some of your money. That's wonderful, but they're never going to do it because anytime the Republicans start talking seriously about tweaking Social Security, the Democrats paint the picture that they're coming after your Social Security, and old people believe it, and old people vote. So again, this is one of those things. Like I think that's an unfixable problem. The problem that Amy brought up about excessive government spending, that seems more fixable if we got the right people in office, but still a low probability event. And again, I'm not trying to sound like a financial prepper here, but I'm becoming one a little bit. I have increased my positions in gold and Bitcoin and silver and 2-year treasuries. And I'm just thinking to myself, a lot of things look really bad if it plays out the way I think it is, with the government increasing spending, the market punishing them for that with higher long end rates. Well, then the Fed comes back in and buys bonds again, and then the dollar crumbles. Is that a easy chain to follow?
Yeah, it's an easy chain to follow. I'm not sure it's going to work out in that that much of a linear fashion, but I mean, but that's interesting. So you're thinking that Bitcoin is what's it at now, 35 grand? It's up. It's got to be up 75% in the last 12 months. You think is it going to go back to what's that? 100%.
It's 120%.
120%.
The biggest. Yeah. So, and you know what my thesis is on this, and what it's been the whole year, is at the moment our Lord and Savior BlackRock decided to increase their footprint into crypto. It might as well be behind them. At that point in time, I realized I don't really need to know what Bitcoin is if BlackRock, Fidelity, Wisdom Tree are all getting into the space, and let their analysts figure out what it is, and they are. And you just ask yourself the question: if BlackRock puts all kinds of investment into crypto and into Bitcoin, is the government really going to go against it and make it illegal, despite the fact that BlackRock, bankrolls all these politicians? I don't think so. That's why I'm in Bitcoin.
Don't fight City Hall. There you go. Jim Iuorio, host of the Future's Edge podcast, proprietor of Branson Palatine. Thanks, Jim.
Thank you. See you guys.
Thank you. And he joined us on our turnkey.pro answer line.
It's like a hot, steaming cup of information to start your day. It's Chicago's Morning Answer on AM 560. The Answer.
It's obvious. The unthinkable is happening. With all the recent media distractions, most folks never saw it coming. But a few did. Their guts told them something very wrong was going on. And now the